I'm sounding an alarm on OpenDoor Technologies stock following its massive drop this month? Look guys, I didn't say it, I'm just reading this article here which I'm going to summarize for you really quick. OpenDoor got huge valuation boosts earlier this year after EMJ Capital President and Portfolio Manager Eric Jackson gave the stock ringing bullish endorsements. Is that guy still trying to get Drake to invest? We had big news with Shopify's former COO coming on board as CEO of OpenDoor, and overall a lot of other great news for the company. But OpenDoor's days as a hot meme stock may be drawing to a close. OpenDoor's valuation fall this month has coincided with a valuation surge for Nextdoor, another meme stock that has recently received Eric Jackson's bullish endorsement. While the two companies share somewhat similar names, their businesses are very different. OpenDoor is an iBuyer real estate specialist, and Nextdoor is a hyper-local social network company. Jackson's endorsement of Nextdoor may have had the effect of pulling out investment capital out of OpenDoor and redirecting it to a hot new name that could offer greater potential for near-term upside. Volatility and rotation trends are nothing new for meme stocks, but this recent trend looks concerning in light of the challenges OpenDoor faces. OpenDoor faces an uphill turnaround path. Under its OpenDoor 2.0 strategy, the company is aiming to focus more on artificial intelligence and shift the model away from successful predicting economic trends. The business model is more focused on generating profits from transaction fees for facilitating home sales than on benefiting from rising values for properties in its inventory. Maybe a good move because the home prices have been pretty stagnant the last few years. OpenDoor has been able to carry out substantial reductions in the number of employees on its payroll and drastically reduce its operating expenses thanks to an integration of AI, but that doesn't necessarily mean that the business will be able to shift into delivering profits and reliable growth. The broader turnaround seemingly hinges on significantly increasing sales and purchases occurring through its platform, but I don't think the near-term outlook on that front is particularly promising. And when I say I don't think, it's not me personally, it's the writer of this article. While U.S. gross domestic product for the third quarter came in significantly above expectations, although if you really look into that report, it was a mess, the performance beat was heavily driven by strong consumer spending among wealthier Americans in government spending. Meanwhile, those in lower income brackets are still showing much weaker consumer confidence levels, and relatively sluggish home sales suggest that many Americans are taking a cautious approach to employment outlooks and the housing market.